So for small business entrepreneurs, what is the best practice? Like, what should we be doing?
Yeah, so there's a couple things. So one, definitely you want to be aware of the tax code, right? So whether that's working with a tax professional, CPA, just getting educated on that. So that's number one. And then number two, you just want to make sure that you're taking advantage of the ways to save money on taxes. So the 6 big ways to save money on taxes is maximizing deductions. So just being aware of how you can maximize your deductions. If you don't know what a deduction is, basically deduction is an expense that you have in your business. And there's 4 requirements that the IRS has as far as deducting things from your income. And the 4 requirements, I call it tax-free, another acronym. So the first part of that free is it needs to be for business. So if the expense is for business, you can go ahead, write that off, take that off from your income. The next part of that is R, which is regular. So it needs to be seen as regular or ordinary for the business. So again, like what you're doing right now.
For the business, and the R is regular.
Regular. So the IRS calls that ordinary.
Okay.
So in your case, right, so you have this podcast, a regular or ordinary expense would be lights, microphone, camera. Those kind of things are considered ordinary or regular for the business. Maybe if you're buying if you're buying nail supplies for this, and you're not doing nails or not talking about nails, that's not regular or ordinary for this type of business. So you want to make sure it's ordinary. The next part of that is essential. The IRS also calls that necessary. And it just needs to be what you need in order to have your business generate revenue and be profitable, et cetera. And the last part of it is extravagant less. So it can't be extravagant. So one of the things that people do is
extravagant less?
That's a word I made up. So it's a word to make that free. It was a stretch. It was a stretch. I'm not going to lie.
Just reaching on that last E, brother.
A little bit of reach. But the IRS calls that not extravagant or lavish. So basically what that means is that, let's say you're going out to a dinner or whatever, you could deduct for a business meal, right? So you can go ahead, have a meal with someone, a client, a potential client, or a customer, and you could deduct for that meal. But if you're going out there and you guys are dropping $10,000, you guys are popping champagne and doing all this other stuff, then that could be deemed as potentially extravagant or lavish. It's okay, the IRS is going to look at that as okay, you're doing the most. And then they're going to want to dive deeper into it. And that's how people get audited and start, raising red flags with the IRS.
You should use economical. Economical.
I like that.
You like that?
That's a real word.
Yeah.
Except extravagant
less. It threw me through a loop because I'm thinking.
Yeah, it's almost like a double negative. A little.
Exactly.
Yeah. I feel you. Economical. I like that. I wanted to. So the thing about it was I wanted to use a word that they use, but I like that, economical. I'm gonna switch it up.
That's what I'm here for, man. Best coach in the world, man. Go to the Board of Me.
Appreciate you.
Go to theboardmeetup.com. Be a part of this. Okay, so are you good with money? Would you say?
I'd say so. Relatively good.
So I know a CPA. I was not good with money. Do you feel understanding how money works and actually saving and stuff like that yourself? Right. It's 2 totally different things.
That's true. So knowledge doesn't necessarily mean application. Yeah. Facts. That's real.
So what are some of the things that you would say you're good with money? Why do you say you're good with money?
Yeah, I say I'm good with money because I believe that I make great investments as it relates to my business. So if I'm going to spend money, I already know where that money is going to be. I'm pretty analytical. So if I'm spending money on a certain expense, I expect to try to have at least a 2x return or potentially 5x return on that money that I invested. So that's one way.
Give me an example.
So an example would be something I invested in. So I recently invested in a program to teach me how to use IG or whatever, right? So I spent $2,000 on the program, and I think I ended up making $30,000 within a month. So that's kind of what I mean by just trying to be responsible and researching the individual and making sure that whatever they do actually works.
What program was that though?
It's someone I found on IG.
Somebody you just randomly found?
Someone I kind of, yes and no.
Person?
No. So I didn't know the person before. So she was creating content about how to make money online on IG, and I DM'd her and I was like, yo, can you show me the game? She's actually, coincidentally, a lawyer attorney.
Oh, wow.
And she gave me game on how to do that.
So what did you learn that took you from 2000? You took your investment of 2030. What did you learn?
Yeah, a couple things. So really with IG, I just didn't know how to post, bro. So honestly, I was just posting random things. I post my personal life.
Right.
The biggest thing was I wasn't adding much value. You know what I mean? So I was just kind of posting things that I thought were important. So that was one thing. Consistency. I wasn't consistent with it.
Right.
And I think the biggest thing was really just ads. So like paying influencer ads. So going on big pages or whatever, paying them some money to post my content. And if it's good content, valuable content, like the gems that Neil was dropping, that actually inspired me to really start looking and diving into that podcast y'all did. Yeah, he was talking about his $1,000 hack and all that kind of stuff. I was just like, okay, yo, let me look at a little more into IG, because before I was looking at IG, I was just like, people aren't here just posting random pictures, and I didn't understand. I didn't really see it as a true monetization tool, because I was heavy in Facebook ads before that.
So it was like the consistency, and you just didn't know how to post at all, which is that's why I'm glad that we're doing the boot camp, because everybody's gonna leave understanding what you now know. Well, in terms of anything you struggle with on social media
right now,
and do you want to know?
Trying to think.
I'm trying to sell you on coming to my boot camp.
I'll pull up. You kind of sold me on that. I want to pull up.
It's about to be amazing.
I think, honestly, for me, content creation, which is funny, content, but I'm not even saying that just to so me, I'm pretty good at, so what my comfort level in my space is like tweeting. So I'm good at, I can come up with a really quick tweet because it's a few characters or whatever, but actually thinking about, okay, because I know video converts pretty well, and that creates a bigger connection with your audience. So like coming up with and thinking about ways that I need to, how do I go about creating a lot of videos that I could use and post, and they'll be able to convert well and get a whole bunch of engagement.
I got you, my brother.
You got that in there?
So I actually have a course coming out too, but the boot camp is like really going to be like impactful. It's like one-on-one stuff. But yeah. So actually by the time this drops, I probably had a course out. So I appreciate you helping me sell the course to my people. All right. So back to the numbers.
Yeah.
Give me, where do most entrepreneurs mess up in terms of handling the money? Because it's hard, man. And now that you say it, I think that the government figured out a way to protect employees by taking their money first, straight out of their check.
It was a way for them to protect themselves, because before it wasn't taken out of their payroll.
Really?
Yeah.
When did this?
I don't remember. I think it had to be hundreds of years ago. But I know when they first started having wages, they weren't taking out of the paychecks, because they knew people, if they know that if they just leave it up to people, they're not going to go ahead and they're not going to pay it, right? So they're just like, you know what, let's just go ahead and create a system to where it's like automatically pulled out the account. Yeah,
and that's why I say I think it's to protect us too, because there'd be a lot more of us in tax trouble.
Yeah,
because like who just, first off, and this is just me because I just hate doing it. Every year, I plan on paying taxes quarterly. Every year.
And you should.
I plan on it. That's the goal.
Yeah.
It's on my resolution list.
Right.
And I don't. And then I'm sick when they just want this chunk of money. And I'm like, come on, man.
Yeah.
That's why I'm about to call. I'm about to call them like, yo, I got a negotiation for you.
Yeah, you need to be paying quarterly at least.
How do you do it? You call the IRS? First off, every time I call them, they just never.
They're not the easiest people to get in contact with. Yeah. So they got an online portal that you can go ahead and put it through.
I can't negotiate through the online portal though.
Oh, if you need to negotiate, then we need to have a conversation. Okay, yeah, we need that.
Because they send you the bill, they want $100. But you know you can call them and say, yo, I got 80. Is that right?
That it's not as
they gonna attack me for this podcast. You know what? No, pay the full thing, okay?
Yeah, pay the full thing. They provide an option to do that, but it depends on, because you're dealing with people too, right? So like, depending on who you talk to and your situation, whatever, your financial situation, like, so you kind of can see it like a little bit like, if I gave you a simple example, like student loans a little bit, you know what I mean? So they take they take different things into consideration.
So rule number one is call with your humble voice. You're like, hey, man,
Don't
just
come out,
going through some tough times, man. You know, COVID,
Right.
it took us out. So, okay. Yeah, I'm using COVID. Oh, they're going to attack me for this. They're going. All right, so what should we be doing? Okay, we want to pay quarterly, but how do you pay quarterly?
Yeah, so if you make more than $1,000 in profit, you need to pay you got to pay them upfront. So basically the way it works is there's a couple ways you could do it. So you can estimate how much you're going to make per quarter or during the year. So a good rule of thumb is like maybe between 30 to 50% of your profit, which is like a super conservative amount.
Mm-hmm.
And then there's also what's called like the safe harbor rule too. So this is kind of not necessarily a loophole, but a pass that they'll give you to avoid fines and penalties is if you look at your past tax return and then see how much you owed. If you pay at least, and it depends on different scenarios, but you definitely want to pay at least 100, if not 110% of that number, whatever you owed. And then if you go ahead and use that as your estimate, then they're going to give you a little bit of a pass at the end of the year. So even if you owe more than that, they'll say, okay, at least you made an effort. You looked at last year, and that's kind of the way you could do it. But really, yeah, you want to submit it quarterly. There's the upcoming date now is January 15th. And then just every quarter after that, you want to go ahead and go through that portal online, fill it out, create an account, and then make that payment.
But what if you make less? Do they give you a refund?
Yeah, potentially you can get a refund. Potentially,
or they'll give me my refund.
No, but check this out. This is yes. To answer your question, yeah, if you overpay,
okay,
yeah, you'll get a refund. Yeah.
Ooh,
I was thinking about something else. Yeah, you'll get a refund.
Okay.
Yeah. When it's tax season, you guys pretty much, tax season is pretty much just squaring up. Do I owe you? Do you owe me? And then yeah, they'll give you a refund if you overpaid or put too much in there.
Got you. And what is January 15th?
That's the estimated payment date for the fourth quarter.